Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks. And in this session today, I'm going to discuss about Astral Limited as to how Astral as a company is doing and what one needs to do, especially as a short-term call. I believe that Astral is looking pretty good. This is basically a short-term call because of the breakout that is taking place, but we'll discuss about the numbers as well and we'll discuss fundamentally as well as to how the stock is currently looking like. First of all, a disclaimer that this is not a stock recommendation, and anybody taking any position into any stock should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. And Before I talk about Astral, his small request, kindly support me on Patreon. And once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. The link for Patreon and YouTube is in the description, so kindly go through that as well. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time on short term, long term market calls. So let's come back to Astral. So the stock is trading around 2100 levels. On screener, it doesn't, you can say, refreshes real time, but it is around 2100 today. So it has broken out from those 1900 2000 band. So that is why it has come into my radar that somebody looking to buy into a stable, a good quality, market leading company can look at Astral as a pick from a short term time horizon as well as from a long term time horizon. But just a little bit about the company. So Astral is basically established in 1996, and it provides pipes and plumbing solutions across India and globally in many parts of Middle East, etc. And their pipes are renowned and probably just as Pidilite and Asian Paints have done, Astral is doing the same by you can say linking their brand with the most plumbers, and most of them yeah, recommend Astral pipes. So that is where their moat is coming. Right now, the company is a 42,000 crore market cap. The PE is pretty interesting because the numbers have dipped. It is trading at a PE of 100, but one needs to understand that why the PE dipped. So I'll discuss about the issues that happened with the company as to why the numbers dipped going forward, and why the numbers dipped in the recent past, and why the stock has fallen. So if you look at the stock has gone down from around 2500 2600 levels all the way to around 1700 18. In fact, it went all the way down to 1850 levels and then has recovered from December pretty sharply. It has recovered. And why I'm saying that it is a very good buy on a short term basis, because of this factor that currently at 2100, it's 50 DMA is at 2020 and it's 200 DMA is 2000. So probably if somebody wants to buy, can take a short term call from these levels of 2100 with a stop loss at 2000 and a target somewhere closer to say 2300 to 2400. 2350 is a reasonable target over the next 2 months for the stock. Fundamentally speaking, if you look at its ROE is around 23%, pretty decent. ROC, return on capital employed, the amount of return they generate for every capital that they end up, you can say, making, and the expenditure that they do on making that capital is around 30%, which is pretty strong even after abysmal, you can say, performance in the last 1 year. So quarterly results, I would say that December results will not be that great. Also, if you look at September, the numbers had dipped from around 1200 crores. The sales has gone to around 1170 crores, and the margins have also dipped from 18% last year in September to around 12%. So nothing home to write about. In these numbers, but we have to understand as to why the numbers dipped over these past few quarters. So if you look at from 2021 June onwards, numbers started to dip, and when I'm talking of numbers, I'm talking of these margins. From 18% it dipped to 15, 14, and now 12. These are abysmal, you can say, margins, and margins should improve going forward. That's what the street believes, and that's why the stock is recovered from around 1800 to 2100 levels. So let's discuss as to what were the issues that led to the fall in the margins, and then we'll discuss about why we feel that this kind of breakout is going to be sustainable going forward. So number one reason for the decline in margins have been decline in sales, and decline in sales has taken place because of the decline in real estate activity here in India over the last year or so. Remember that during the pandemic, after what happened in March 2020, when things started to dip, you look at here in March 2020, it was around 18% margins, and then during the height of the first wave of pandemic, the margins dipped to 13%, and in September it went to 19%, and slowly, gradually, they started to come back. 700 crores in September 20, 900 crores in December, and then 1130 crores in March, and that led to a big rally in the stock. So if we look at uh, around April May 2021 as to how things panned out, things were looking pretty good at that point of time. So if we go to a 3-year chart, uh, around this period of March and then post March numbers in May, the stock really performed well. And even June numbers, people took in their stride. June 21 numbers. So let me have a look. So in June 21, they did 700 crores with 18% margins, and things were looking fine. But then once the rally began to fade, and that's where from Jan 22 the stock started to fall, although we had a rally again in August September 22, but the fall kept on happening. This was purely because of the fact that numbers of margins from 23% went to 18% and started to dip even further down to 12% now, and probably will have 12 or 11% in December as well. So the biggest reason was the demand that slowed down. There was pent up demand post the first wave of pandemic, and so there was huge sales that was happening. So there lied the issue. So demand reduced, so sales went down. Plus, second reason for all this that was happening is the higher raw material cost. Oil prices went up. There was a rise in, you can say, crude prices, as I said, rise in metal prices, rise in prices of from the products that they make, these pipes, etc., the plastic and everything. Prices of all these things started to go up. Freight prices, freight cost, transportation cost went up, and that led to the margins dipping even further going forward. So there's a second biggest reason. The third reason in this is that other players are also taking in. So it's not that Astral continued to gain market share. They were doing well till 2021, but last year has not been that great. Other players, especially one or two that are listed, took them on head on, and started to gain market share, and that's why sales dipped. So my concern here is that the sales have dipped sharply and margins have done so, but margins have dipped for most of the companies, and that has happened for Astral. But sales have gone down. So if you look at even in if you look at somewhere around the September quarter, last quarter numbers, sales have dipped, and that means in December also we are looking at a situation because of the and this is the fourth reason that I want to mention here, because of the monsoon dragging into October in many parts of India. The sales of pipes and construction activity wasn't that great. So fourth reason was that the monsoon factor, and so December numbers will not be that fine. We have seen Asian Paints came out with the same reason, and Asian Paints did not sell well in December quarter. And I think this time around, Astral and other companies which are related to, or you can say, infra ancillary plays, will be impacted directly. So that's why December numbers will also be something where we could see a dip. But what the street believes is that raw material prices have cooled down. So now let's discuss as to why the stock should end up doing better, and that's why the rally is coming in, a small rally that is happening, and the stock may surge from here. So the first thing is that the raw material prices have cooled down. it's not at the same peak levels. That is the biggest reason as to why things could look upwards. Plus, we are seeing that inflation is also peaking out. Inflation was another reason why the margins have dipped so much. So inflation should peak out now, and March quarter should be much better than what the last two quarters has been for these companies in terms of raw material prices. So inflation cooling off is another reason why I believe stock could move ahead and even go to these levels of 2600 in the next 6 8 months. And the third reason is that construction activity should pick up from here on in with so much infrastructure push and spending that the government is doing. Hopefully from this year onwards, FY24 onwards, things will get going on the construction part as well. And so that's why another 20 25% upside over the next 9 months or so is very much possible on the stock. So overall, technically speaking, I was to speak that the stock is a buy with a stop loss of 2000 and a target of 2400 in the next 3 to 4 months. But I won't be surprised that in the next 8 9 months we could see new highs on Astral if things really get going on the construction activity front. What gives me a lot of confidence is its balance sheet. If you look at in the last few years, over the last 5 years, from March 17 to March 22, we have seen that reserves have grown from around 835 crores all the way to 2300 crores, nearly tripled. And in fact, by September, it was around 2400 crores. Whereas you have borrowings that hasn't gone up that much from 190 crores. In fact, it has dipped to around 95 crores. It has halved. And that gives me a lot of confidence that the kind of balance sheet that Astral is maintaining, we could be looking at much better numbers going forward from Astral. Uh, if you look at the shareholding pattern, promoters hold around 55%. Yes, FIIs have sold, and that's why the stock has fallen. So FIIs had around 22.75% in June 21. It has dipped to below 15% now. But look at the DII holding. DII holding has increased from around 8% all the way to 15%. It has matched, you can say, share by share. DIIs have matched FII. So the public shareholding has remained only 14%. And even in that public shareholding, there have been large players that have been part of this. But 14% free float, company doing extremely well. Hope to do well going forward. It is a very good, you can say, infra play that one can play, and the stock is down some 20 25% from the top, looking good at these levels. So this was a video on Astral. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.